Hey, what's up? John Sonmez here. So I got another question from Reach Me about real estate. Again, I've said this before, but I'll say it again. You can get access to Reach Me. Click the card or description below if you want to ask me a question on there. If I make a YouTube video, I may do a longer one. If you're a coaching client, you get priority. I've got some coaching slots possibly available. I don't take on very many people at any time. I may have a coaching slot, but they're usually all taken. But you can check out if you want. It is very, very expensive. Okay. And I coach on all kinds of things, not just real estate, but that's one of the things I can help you with. All right. With that said, also in coaching, clients get priority, obviously, on Reach Me. Okay. So I got this question from one of my coaching clients, and he says, could you do a breakdown from your personal experience on the pros and cons of buying condos, single-family homes, duplexes, fourplexes, apartment complexes, commercial real estate, and syndicate funds? And for most of your real estate you own, are they in class A, B, C, or D neighborhoods? Do you recommend for or against buying certain class of neighborhood? Okay, so I'll try to make this somewhat quick here. So I'll do a breakdown of these. First of all, let me say that what I'm looking for mostly, and I think I said this in another video, is I'm looking for good deals. I'm not necessarily looking for a particular class of real estate. And this applies to everything that I'm going to say here, right? So what I am interested in is getting a good cash flow, a property that is going to be easily maintainable. So there's not going to be huge maintenance expenses. But even if there is, if someone's managing it for me, it's not a huge deal. Okay. But I'm looking to make sure that I'm getting a good return on my investment, right? So I want primarily to have a solid investment. So primarily the thing that I'm concerned about is the price ratio versus the actual cash flow that I get from that property. Okay. So I want good deals. I want something that costs a little bit, but gets a lot of rent, a lot of income, not just rent, but overall net income after all the expenses, right? Which could be maintenance, right? It could be vacancy, right? It doesn't really matter so much as on paper, on the books, I'm getting a good investment, right? Okay. And if it appreciates, great, that's fine, but I'm not counting on that. I'm counting on the cash flow. Okay. So that doesn't mean that I totally ignore those things, but the rest of that stuff is secondary. So if I were to do a breakdown here, this is just from my own personal experience and generalization, but I'll break any of the rules that I'm going to give you here simply because if something is a really good investment or good deal. Now, condos, the problem I have with condos often is that condos usually have HOA costs, the condo expenses that, or the property owner expenses that are usually expensive, and they usually go up over time because they're shared units and you don't have much control over that. So there's been condos that I've bought in the past where I've ended up spending a lot of money on these fixed costs of the maintenance of the condo that, especially if it's mismanaged and whatnot, could be really, really cost prohibitive. So that's the hidden bomb in condos that most people don't check out. So check out the maintenance, the property owner association costs, the homeowner association costs that with the condos. Sometimes also in bad markets, they can be hard to resell, but I don't really care if I can rent the thing out. Okay. And I can make a profit. I'm not looking at making it easy for me to sell it. Okay. Condos can often be a good deal because you can find really good prices, but often the prices are so low because you have the monthly maintenance fees by the condo association, and there can be a lot of politics and pain with that. Also, condos being cheap is something that I tend to avoid a lot of times simply because I want to spend a lot of money on the deal. I don't want to be making small deals and doing a lot of them. That's more maintenance, more headache, having more units, and especially when they're independent properties, and also just the carrying costs and the transaction costs of going through and making small deals. I'd rather make bigger deals. Okay. That doesn't mean you should put all your eggs in one basket, but at the same time, you got to find that right level. Single family homes are often pretty good. The only problem is single family homes often have maintenance themselves, right? A single family home, the biggest issues that I have with that is that there's often like yard maintenance and there's more expectation on that. With a duplex or a fourplex, the tenants don't really care so much. There might not even be a yard, but with a single family home, there's more shit that can go wrong and break. And that's the issue with that. And oftentimes those are harder to find good deals on because Oftentimes the price is a reflection not of the rent or the value, but of the perceived value in that neighborhood, right? People want to live in this nice neighborhood, or, the single family home values sometimes appreciate faster. And so they don't rent as high as they could. Also, sometimes single family homes, if they're large ones, it's hard to rent them out because, especially if they're in nice neighborhoods, big, expensive, if they have high rents, a lot of people can't afford those kind of rents. So you've got less clientele, right? I want to find properties in general that are, 2-bedroom, 2-bath, maybe 3-bedroom, 2.5-bath with a garage. Those are real simple and easy to rent out. And some single family homes fall into that category. But for example, I would never buy a luxury 6-bedroom home to rent out. It's ridiculous. There's so few people that are going to be in the market to rent that. And then there's so much shit they can break and so much stuff that can go wrong. I'd rather not deal with that. So, but I have plenty of single family homes, and I have good ones that are a good deal. Duplexes are often really good. Often they're a sweet spot because you get sort of some of the value of single family homes. A lot of times they still have garages, right? I've found duplexes to be some of the most profitable properties that I've gotten. Sometimes they're hard to find in markets. I do like duplexes. Same could be said with fourplexes. Fourplexes usually have less of a yard or no yard, so the maintenance is usually lower. But I find that once you start to hit in that fourplex range, okay, this is just my experience, you've got more short-term tenants. In duplexes, single-family homes, you've got more longer-term tenants. In fourplexes, I find you've got more shorter-term tenants, so that can be an issue. The turnover rate is often higher, and a lot of times if it's a luxury kind of fourplex, people are living above their means, and so you get people that are not exactly the best tenants, okay? Apartment complexes, same thing. I don't have a huge amount of experience with apartment complexes, right? I've owned some things that would be considered like a bunch of fourplexes together. That would be considered an apartment complex, or I've owned fourplexes in apartment complexes. And again, some of the same detriments there of high turnover rates. And if you don't own the entire complex, you might have high property owners association dues, which can be a real pain in the ass as well. And the politics of that. Commercial real estate, I'm not an expert in this. I have 2 office spaces, commercial office spaces. It's a totally different ball game, especially with the office spaces, because you don't have management companies. You lease it out, and the way that you handle, you're going to have vacancy for a longer period of time, but then hopefully you should have them rented out for a longer period of time. I know some people that are killing it in the commercial financing is totally different. Same with apartment complexes. You got to get commercial loans. So it's a whole different ball field. But again, I think it can be really, really profitable, but I'm not an expert in that. So I can't give you really good advice on that. I've avoided it in general because the 2 that I've had, the 2 office spaces, have been a pain in the ass. I have a tenant that's not paying even now, and I have to go after them. And when a business fails, they're not going to pay the rent. That's basically how it goes. They're not going to pay the lease. So, whereas a person, it's usually like they got to have somewhere to live, whereas a business is a secondary thing. Okay. Syndicate funds, I don't have a huge amount of experience with this, but I've heard a lot of bad stories. Ultimately it comes down to this. I'm not going to give like a huge thing on syndicate funds, but for the most part, the people who make the most money in syndicate funds are the primaries. So they're the people who are putting the deals together. I'm not saying that there's not good syndicate funds and that you can't make money in it, but there's no such thing as a free lunch, right? You got to think about this. If all you're doing is contributing money, but you're not finding the deals and you're not negotiating the deal and you're not going through the process of acquiring the property, you can't expect to make as much money. You can't expect it to be as profitable. Now, when you're pooling funds together, right, that can compensate for that to some degree, because maybe you can find better deals, or you've got more resources available to you. But in general, I would be wary of syndicate funds. There's a lot of scams out there. A lot of things can collapse on you, and you could end up being left holding the bag. I'd rather have control over my deals and have full control over the investments that I'm making, rather than turning that over to someone else. Again, I'm not saying there's not some good turnkey investments out there, but I would really do my due diligence before going over to a syndicate fund. Okay. Let's see. For most of real estate you own, are they in class A, B, C, or D neighborhoods? do you recommend against buying certain class of neighborhood? Okay, I don't pay attention to the class of neighborhood. I'll tell you that. I do pay attention to whether the neighborhood is totally trashed or not. But ultimately, I want to see rent rolls. So if I'm going to buy a property, I want to see the rent rolls for the past 4 years, and I want to do my due diligence. I've had plenty of properties in semi-bad neighborhoods, not horrible neighborhoods. I wouldn't ever buy something in the worst part of the ghetto. It doesn't make any sense, right? You're just going to have too much problems with drugs and crime and all that shit. But here's a good thing, okay? Get a property management company and ask them when you're about to buy a property if they'll manage it. If they say, no, I won't manage this, okay, then you know it's bad. It's a bad area, and there's a reason why. They're like, I've had property management companies say, I won't even walk in that area because I've been shot at there. I don't want to take the risk. That's a bad sign. That you know, it doesn't matter if it cash flows at that point because you're not going to be able to get it rented out because no one's managing it. But in general, I've bought a lot of properties in lower kind of class neighborhoods, not in the best. In fact, typically you're going to find the best cash flow and best deals in neighborhoods that are not the best, right? The best neighborhoods, people are paying for that premium and the prices reflect that premium. They're not necessarily good cash flowing deals. So, and plus more shit can get broken and go wrong, and there's a lot more possible expenses. So I try to find stuff that's kind of in the middle. In general, I find that those are where the best deals are. You know, you can find some really, really steals of a deal in Class D neighborhoods, but that's not necessarily a good idea, right? There's a trade-off there. There's a reason why those prices are so damn low, and it's because of the hassle and the headache, right? So, you know, I would say find the highest class of neighborhood that you can. That is the best investment that you can. But think about, again, I'll say this one more time, with this whole thing, everything here, it's all about the investment. Okay, it's a good investment. It doesn't matter if what the type of property is or what the class of neighborhood is, so much as if it's a good investment. If you buy a bad investment in a Class A neighborhood and it's a fourplex, it doesn't fucking matter, right? It'd be better to buy a good investment that is a condo in a lower class neighborhood, right? If that makes sense, right? Because ultimately what we really care about is what is our return? What are we going to make? Okay. And what is the long-term outlook? Again, you could look at this and you could say, well, what is likely to appreciate or not? And that's fine, but that's all speculation. I don't want to do things on speculation. And eventually, if prices appreciate, it doesn't matter what the class of property is, and it doesn't matter what the neighborhood is. To some degree, there's some caveats there, but in general, if prices go up, everything goes up. Now, there's some exceptions. Certain property types could not do as well in certain environments and certain neighborhoods. Obviously, neighborhoods can go to shit, and that can severely, degrade the price. Or certain neighborhoods can do really well, and that can increase the price. But you don't have a crystal ball. I don't have a crystal ball. I don't try to predict that stuff. I just try to make good, solid investments, and that's what I would encourage you to do. All right, check out my playlist on real estate if you're interested in real estate. I've also got a course out there